Hello everyone, it's Davide here. Welcome back to Learning Finance. In today's video, guys, I'm gonna bring you 14 stocks that will release earnings this very week. It's finally earnings season, so the Q2 earnings season that are predicted to be one of the worst earnings ever due to the fact that this trimester has been basically in the heart of the pandemic. Okay, so it would be very interesting to see how those companies react and how much different results are from expectations, okay, from Wall Street expectations. In the previous week we had banks, okay, so we saw how JP Morgan did well, Citigroup did well, while Wells Fargo did not very well, okay, and that's because of diversification. JP Morgan and Citigroup are more investment banks and they get a lot of commissions for trading, okay, so to provide liquidity. And with these kind of volatile markets, it's normal that they make a lot of money. While in terms of Wells Fargo, their business is more focused on mortgages, okay, so as you can imagine, on the other side it was not a very nice earnings release for them. Anyway, let's see what we have this week. Leave me a like if you find this video interesting. An early like will be really appreciated. You help me to grow the channel and reach more people, and subscribe to the channel. Let's begin. Alright guys, so the first stock in the list today, aftermarket, so like 4 hours after I released this video, IBM will release earnings. So the consensus is expecting an earnings per share of $2.08 and revenues of 17.4 billion. When it comes to IBM, it's trading around $135.11, and the previous earnings, they were all of them beat the expectations, okay, not by much, but they were positive. Overall revenues for IBM have been pretty consistent during the last years, and the quite negative note about this company is that it looks like that they are not able to bring up earnings anymore, okay. They have already become a huge company and right now it looks like they are quite consistent, okay, but not growing too much. So it will be very interesting to see if they are able to beat that expectation today as well or not. Let's go now to Tuesday. So tomorrow we are having Coca-Cola and Snapchat, okay. Coca-Cola in the pre-market, so very early in the morning, they will release earnings around 6:30 a.m. in New York time, and the consensus for Coca-Cola is 40 cents, okay, as earnings per share, while the revenues are $7.2 billion. When we look at Coca-Cola company, ticker symbol KO, we have that the previous earnings were basically not negative because they beat expectations in Q1 and Q4 2019 and Q3 2019. Well, basically they met the expectation and beat again in Q2 2019, okay. But what I don't like about Coca-Cola is that overall we can see that it's a downtrend, okay. So okay, they are positive, but it's a downtrend. They always expect less and less, okay. And here we see very clear, look at that, quarterly revenues and earnings. And that's something that I don't like about this company. It's basically not able to continue to increase and maintain the market shares. It looks like it's losing market shares. And okay, it's a dividend company. You cannot expect a huge growth from this company. But you know what? I don't like to see revenues going down, okay, even before the pandemic. So it will be interesting to see how this will turn out. The other one is Snapchat. So in the aftermarket, and the expectation for Snapchat is a loss of 23 cents per share, while in terms of revenues, $437 million. Snapchat is not profitable yet, and I don't even know if they will ever become profitable. Previous earnings, they were missed, okay? So Q1 2020 missed for Snapchat, while the previous ones were quite great, beat expectations. We are gonna see how this will turn out. Actually, the previous only positive earnings per share for Snapchat was Q4 2019, okay, when they had around 3 cents per share. All the others were negative. The next stock in the list on Tuesday after market will be United Airlines. So will be the week of airlines because we are going to see that later on we have Southwest and American Airlines. The consensus for United Airlines is a minus 8.96 as earning per share, so a loss, a very huge loss. And revenues 1.3 billion. United Airlines history in earnings, well, they were positive, okay? They beat expectations in the previous 4 quarters. Of course, this has been the worst quarter ever in the history of airlines. Okay, I think that if you go back in the history, not even after 9/11 was something like that. This has been crazy. Anyway, the TSA checkpoints show that flights are going up, so probably can be that in terms of number of passengers, the worst has gone. Okay, we hope that. United Airlines revenues were increasing during the last 4 years, and in terms of quarterly, we see how basically they went to decrease coming in the pandemic stuff. It's going to be interesting to see how this will turn out. Anyway, I think that these kind of stocks are the kind of vaccine stocks. Okay, so it doesn't matter how bad earnings are going to be now. As soon as we are going to see positive news about this illness, those stocks will explode in any way. Okay, even with losses in earnings, because that's how it is. Then we have Wednesday, which is a fire day. Okay, it's an incredible day because we have earnings of both Microsoft and Tesla. I think that this day will be a very volatile day in the stock market. In terms of Microsoft, we have a consensus earnings per share of $1.38, while revenues 36.4 billion for Q2 quarter. In terms of Tesla, Wall Street is expecting an earnings per share negative, so a loss of 14 cents per share, and revenues $5.1 billion. When it comes to Microsoft, guys, they basically destroyed expectations from a long time ago now, okay? Now, these are the last 4 quarters. And you can see that all the times, there is a huge gap between expectations and actual, and that's very positive for a stock like that. We will see how this will be, but I think that it will be positive too. Okay, Microsoft is so diversified that even if this quarter has been not great, I think that Microsoft will not surprise in a negative way. Okay, it will be the first time in a lot of quarters in a row. Just look at revenues, and this was awesome. Okay, look at this growth. While on the other side we have Tesla, guys. This stock is, of course, absolutely crazy right now. The hype behind this stock right now is something incredible. I think everyone is invested in Tesla, and when it comes to see the previous earnings, we see that the last 3 of them were very positive. Here we have the Q3 2019, which is basically the date in October when Tesla just exploded, okay, with like around $200, and since then, we had the plus 20% in the aftermarket, and now you all know the history after that, okay? The previous one was negative, but since then, positive. Q1 as well. It will be very interesting to see how this will turn out. Anyway, I can tell that the implied volatility in options of Tesla, so stock options on Tesla, the implied volatility in the premiums between call and puts are suggesting a plus or minus 17% in the stock price this week, okay? So this is the implied volatility calculated with these prices. That basically tells us what the market, what the investors are expecting in Tesla this week, okay? So to all the Tesla investors, just keep an eye open, also 2 eyes open on Wednesday. Aftermarket. On Thursday, we have AT&T and Twitter in the pre-market. The consensus for AT&T is $0.79 as EPS, while revenues $40.96 billion for the giant AT&T. While when it comes to Twitter, we have earnings per share expected to be 0 and revenue $698 million. Quickly, we can see how AT&T, ticker symbol T, just missed the previous earnings date, okay, released in Q1 2020, while in 2019 they were all quite positive, okay, beat and met expectation. When it comes to Twitter, the company destroyed expectations on Q1 2019, while this one, Q3 and Q4 were negative, okay. Q1 2020 has been positive for them. Right now, Wall Street is expecting basically a quarter to be a break-even, okay, so zero. Also on Thursday, in the pre-market, we will have the last two airlines, okay, so Southwest and American Airlines. So this week will be very important for airlines as overall. Southwest is expecting a loss of $2.72 per shares. Here I just put another dollar sign, sorry about that. In terms of revenues, $930 million for Southwest. When it comes to American Airlines, we know that this is the riskiest companies in the airlines industry. Absolutely no doubts about that. The earnings per shares are estimated to have a loss of $7.70, which is a quite huge loss for American Airlines. The revenues are estimated to be $1.4 billion. We have that Southwest Airlines just beat all the expectations in the last 4 quarters. So we are gonna see how this will turn out. Southwest is the best companies in terms of balance sheets. On the other side, we have the worst one. American Airlines, the most speculative ones. They missed expectations in Q1 2020. So now they are expecting a huge loss, so we are gonna see if they are gonna miss Q2 as well. The previous 3, so 2019, Q4, Q3 and Q2 were positive for American Airlines. Overall, the main problem with this company is the huge amount of debt that they have. So let's keep an eye on that on Thursday, because this stock is very cheap in terms of price and it's a very volatile stock, okay? I'm pretty sure that traders are enjoying this stock. Thursday, this time after market, we have Intel and Skyworks Solutions, okay? So for Intel, the consensus is $1.11 per shares, the revenues 18.5 billion. While for Skyworks Solution, the little gem of 5G, earnings per share 1.13. In terms of revenues, $691 million. Intel Corporation, ticker symbol ENTC, just beat all the expectations during the previous 4 quarters. And they beat those expectations by a lot, okay? There is a huge gap also always between expectations and actual. Also, revenues are going up overall, and so we are gonna see if they will be able to beat this very bad Q2 as well. When it comes to Skyworks Solution, the stock is trading at around $133.95 right now, and as a P ratio 29.05. It's quite a hot stock in terms of 5G stocks, okay? So if you like 5G stocks, you probably heard about Skyworks Solution. The previous 3 earnings were positive, okay? So beat expectation in Q1 2020, Q4 2019, and Q3 2019. Missed in Q2. Looks like their revenues were already decreasing in 2019, so before the pandemic. It's gonna be very interesting to see how this stock will react to this very negative quarter. And then we have Friday. Pre-market, we are going with Verizon and American Express. Okay, so for Verizon, the Wall Street is expecting an EPS of 1.15 and revenues $29.84 billion. While American Express, the earnings per shares are estimated to have a loss of 4 cents and revenues $8.1 billion. Verizon, we see that previous earnings in Q1 2020 were positive, okay? They missed Q4 2019, but overall the last 4 earnings, 3 of them were positive and just 1 negative. Verizon is another giant, okay, so a really big company that overall it has consistent revenues, okay? Not a huge growth, but quite consistent. What I don't like about Verizon is the net margins, because look at that, a very mature company like that should have earnings a little bit more consistent, okay? Because you see the green bars are consistent, but the blue one, no, okay? This is a problem of net margins. They are not consistent. But when it comes to American Express, we have that the stock just missed Q1 expectations by a lot. The estimate was 1.43 in Q1 and actual 0.41. So a lot. Right now we are gonna see they are expecting a loss of 11 cents. We are gonna see if it's gonna be worse than that. The previous 3 quarters in 2019 were positive though. So I hope you find this list interesting and leave me a like and leave me a comment below. Tell me if you are planning to buy or if you are interested in one of those 14 stocks. Subscribe to the channel so you don't miss out new videos, and as always guys, have a wonderful day.